Give and grow. What is up? Welcome to another episode of the Grow Show. Eric and Ryan coming at you today. First things first, if you like what we're doing, please like this video, hit that subscribe button. Guys, we are also on TikTok, trying to get a bigger presence there.
Yeah.
Really, all the social medias. But man, what a beautiful day. How you doing today, Sir Ryan?
I'm doing good. Woke up really early, got a lot of chores done, got my 10,000 steps in. Ready to record this video. I like being up on Saturday mornings. Hopefully one day, every day will be like a Saturday morning. You know what I'm saying?
Heck yeah. Bringing the energy, man. I love it. So before we get into our conversation today, the first thing I want to kind of go over is give a review of the joint.
Yep, the joint.
What's the latest on it, man?
Well,
looks good.
It's not fancy. Right now we're still making 5% in the money market fund.
Yeah. Which
is fine for us. You know what I mean? We said this before, and I know a lot of people are probably like, well, y'all missed out on the rally. Yeah, we did. But we're starting to see some cracks. Just on the charts, man. Everything's still pretty much overbought. People are still buying the dips and stuff like that, which is fine. But the rally's kind of slowing down a bit. But I will say, though, that PCE came out on Friday.
Oh, yeah. I didn't get to see it. What was it?
It pretty much came out as expected, in some ways a little better, which is good. Inflation's coming down.
Yeah, I saw a statistic yesterday, and it was talking about basically the value of stocks right now are in the 97th percentile, which is wild.
What does percentiles mean in this case?
So it's like if you're taking a test, like you want to, it's reverse. You're taking a test. You want to be as high as possible.
Right.
You want to be in the 98th, 99. Like that's the top. So it's saying like for the value of a stock, you're buying at the top right now. You can still go to 99%. But
I see. So the room.
97. So if you wanted to buy, obviously a buying opportunity would be more like 80, 70, 60, even 50. But right now we're 97. The only time that a time to compare would be like maybe something in the 99th percentile, and that would be like the tech bubble.
Oh, okay, gotcha.
Like when stocks got hyperinflated, huge bubble in the tech bubble. That would be like an example of 99, and we could still go there. Okay. That's the thing. So you got to keep that in your mind. Like we can still go up to that 99 percentile. But.
Yeah, we were definitely burned by that because I remember feeling like, oh well, we're not going to be going to like these levels. There's no way it's going to touch it. It's going to get rejected. But no, it's been just blowing past. But this is why I said in the very beginning of this that there is the past couple of weeks the market's been moving kind of flat.
It has.
Despite what Jerome Powell was saying, not with the market, but despite his comments on the outlook of the economy and their plan, which we'll get into now. So one of the biggest things that happened recently was the FOMC meeting that happened last Wednesday, and pretty much Powell was like, yeah, everything's looking good. He was even making comments going as far as like, I don't know why people would even consider the market to be or the economy to be doing so bad because it looks so good.
Well, then don't consider lowering rates.
Yeah, see that? Yeah. That's the thing is that if it's so good and if you really want to bring it down, then keep rates high. So why do you want to cut? That's the question, and there's speculation behind that. People think it's political. People think that they want to really they don't want to harm the economy too much. That's the thing. You say it's going good.
Yeah.
You say it's going good, so why not? And something that happened too, I think it was this week, another Fed member, Waller, was talking. He thinks the Fed should lower the amount of rate cuts this year. So pretty much there's some people that are like, no, we need to keep this longer. There's some people like Powell who I feel like wants to have this be shorter.
Yeah, I think they're either going to cut for political pressure or they're going to cut because something's broken.
Right. Yeah.
As far as going higher, that's a possibility too. But I don't think we're going to go higher until they cut.
Right.
So there's a lot of different paths this can take. But yeah, there's just a lot of different catalysts. But I really don't think, like I said, if they cut, I don't think they're doing it because they actually think they have inflation under control. It's under political pressure.
Yeah.
But also they might be forced to cut because something has broken.
The latter one where they cut for reasons because of something's broken. if you want to look at some right now, there's a lot of pressure on the banks. It's interesting that that one piece of data about the consumer spending was being higher, considering that a lot of banks have been coming out saying that they're not making enough money off of people because they're like lowering the amount of loans that they're handing out because interest rates are so high. We don't really know what the real story is.
And they're going to lose more cash in this tax season because if you're paying in, that money's, it's probably coming from your savings account.
Right. We're not trying to spread doom and gloom because I'm telling you right now, we're looking at what's just happening with like, the economy, the data, and then we take that and try to translate that into the market, which then influences our decisions. But it goes back to what we said, you know what I mean? It's like 5% is not a lot. I'll give it to you, but you're not losing anything. It's consistent. And, it's a lot better than what it was about 3 years ago when you were making like almost like negative, like you're losing money holding cash basically back in the day.
Yeah. You were losing to inflation for sure.
Right. Losing to inflation, and you weren't making enough on the interest to even justify. Speaking
of inflation, you being someone who tracks all your spending, have you noticed that groceries and gas has gone like do you feel it? Because a lot of people were saying, like, I talk to people pretty regularly about this, and a lot of people feel it at the gas station. They feel it with their groceries. They feel it with their rent increasing. Are people just kind of, are they just kind of being silly about that? Or do you, because I know you look at the data every week at your own spending. Are you seeing that? Are you seeing inflation having a toll on your spending?
On my spending, groceries was one, I think, really, because, like butter, eggs, milk, which, we don't really drink a lot of milk, but I can see milk prices going up. A lot of the stuff that like we normally get, like meat, for example, has gotten a lot more expensive. Other kinds of like, even stuff that's like not even like food, like toilet paper towels, like, all those things have definitely gone up. I think that I can see it go up for groceries and for gas recently though, because for a while gas wasn't really that expensive for the past, I would say
getting
like
better for a little bit.
Yeah, I would say maybe like a whole year gas has been kind of fine. Now I'm starting to see gas go back up here where we live. We're starting to see around like $3 a gallon. Last week I saw like $3.20, $3.30 a gallon. So I was like, man, it's starting to show. And if you keep up with crude oil or like even something like Oxy, for example, those indicators slash oil companies.
Oh, energy,
yeah, just like energy in general. Like it's been coming up.
They really have.
So
oil.
Like but oil is very different because I feel like that there's a lot of like geopolitical stuff that goes with oil that is like, it's not all. Well, I mean it's all supply and demand, but there's like a big thing with how they're like distributed and like deals that like people make. So
can I say something else? I just want to get your thoughts on this because I heard it in a podcast yesterday, and the guy was talking, and he said his father told him one thing. He's like, if I give you one piece of wisdom, I want you to take this. And this, obviously, when he was talking to this man, his son had just finished college. He was starting his first job, and he was about to start getting paychecks consistently.
Yeah.
And he said, every paycheck, I want you to pay yourself first. And one way I want you to do that, I want you to buy some gold and some silver every single paycheck.
Yeah.
And so that wasn't all he bought, obviously. But he stuck to that, and it's worked out very well for him. What do you think about that? Not even gold and silver, but like let's even throw Bitcoin in. Like, if you could talk to yourself, 3 or 4 years ago, and you said, hey, every paycheck, I want you to buy a little bit of gold, a little bit of silver, a little bit of Bitcoin. How do you think that? Well, how it would have worked out, but do you think that's wise advice to give someone? Like, just what do you think about that?
I think so. I think the fact that it starts with the actual act of like buying something that increases in value over time, because he could have had the same thought about like you can buy mutual funds, index funds,
right?
You can buy something, but like I mean gold, silver, Bitcoin. We'll talk about gold and silver first. They've been around for God knows how long. They've
well, they're time tested. That's my thing.
Oh yeah,
they're
sure.
Probably
sure.
the most tested.
Yeah.
Hedges, but they've held their value the longest.
Right. As far as as investments go, I mean, I think that they're great. I mean, they go down in value, but gold and silver might have small or even mid level crashes, but nothing crazy where it goes down to where, oh, I gotta sell all my gold. It's always gonna be something that's gonna either be flat or go up or correct itself and then just go back up and then stay flat. So I mean, I think it's good. The gold and silver. For sure.
I ask that because people talk about it all the time. The dollar's being attacked.
Yeah.
People claim that we've weaponized the dollar and now it's coming back to bite us.
Yeah.
But as an American, as an investor, and someone who's trying to think ahead, if the dollar did ever lose its status as a reserve currency, that would change our portfolio's value a lot.
Oh yeah.
And I'm not saying that's going to happen. There's really no telling. There really is no telling what's going to happen over the next.
Yeah, there's no really
for our lifetime.
I would say it's still good though. I mean,
my thing is, if something happened to the dollar, what would be a good backup for you? And I think gold.
I mean, gold and silver are good,
and Bitcoin I like.
Yeah, I'd say Bitcoin is kind of like the wild card.
Right. I worry about Bitcoin because we still don't even know who created it.
Right.
That's the only. But with the government allowing ETFs, and I'm not saying the government created Bitcoin, but I mean them supporting it the way they are, allowing these brokerages to create ETFs is very interesting to me.
See, because the government has exposure to Bitcoin because Bitcoin is a decentralized.
Right.
So the government has no real regulations on it, on the blockchain. Now, I know that they're trying to get into that. They talk about crypto all the time. They're we gotta have some guardrails on it. I think that going down the route of having the ETFs is really good for them because I think a lot of people would do that more than Bitcoin only because they're probably not going to be as volatile. There's also going to be regulations, so you're not going to get rug pulled like you would with Bitcoin because let's be real. The reason why Bitcoin hasn't stabilized is because it's still speculative.
Yeah.
It's still very, very speculative. It's still very, very in a category where it's like the Wild West still. It's like the grandfather of freaking crypto. So with that being where it's at right now and still doing this all the time, a lot of people are just still scared to get into it.
And it seems to just follow tech. Well, I mean, I've heard people say it follows gold. It also follows tech. But in my opinion, it seems to just kind of follow tech.
Yeah, I mean, it's a digital currency, so it's definitely going to follow that. But also too, a lot of these companies adopting Bitcoin on their balance sheet. They want to hold it there. We have the Bitcoin halving coming up pretty soon. Yeah. I don't know the date on that, and I honestly don't know a whole lot about that. But this isn't something to say for y'all to buy Bitcoin. But we said this a long time ago, back in 2022. I'm all for crypto. I'm all for a more secure way, and low key. I kind of like the fact that it's decentralized because if the government has rules on everything, then they just have control over everything. Yeah. They can shut down. Now, some things need to be in control. For example, companies, that's why, back in the early 1900s, late 1800s, there was monopolies on everything.
Oh yeah.
Because the government wasn't regulating any of that. And there's, one guy can just strangle everybody and not have to worry about they had control over everything.
Would you hate if there was a digital currency that they made us use?
That they made us use? Not really, because that's what cash is right now. So I don't really think it's a.
Well, I know, but in a sense, if you have a digital currency, some of this stuff is far-fetched, but imagine you're driving in your Tesla, you get a speeding ticket, and it's not even it's not about going to court. It's just, oh, that money's out of your account. You got a ticket. That's $70 gone. Mm-hmm. We see every purchase you make. We have more information.
Oh, they see every purchase you make. Well,
yeah. If this ever comes to fruition, that's what it's going to be like. When you talk about control and
well,
centralized.
see, here's my thing with that. I think that we have so many dollars unaccounted for right now that I can see it being a good thing to keep track of everybody's money. Not like them, being like, oh well, we have control over like everybody's accounts and stuff like that. But there's so much money that's not in like actual circulation.
But what if they just took it away from you?
Well, I mean, if they took it away, that's messed up. But like,
that's just what the potential for that I think is what people are worried about.
Yeah, that's messed up. I would definitely not be with that. But I think that tracking money better, because like if we knew how much money we actually had, because for all we know, we might have a lot less money, a lot less money than we think, which would be really bad. But we can also have a lot more money that could be put back into us, because we know the government is borrowing all the time,
right? And
that's kind of like how we ended up where we are right now, where it's this constant cycle of the government borrowing from the Fed printing money that creates more money into circulation, causes hyperinflation, but nothing's really changing as far as like how much we're actually producing.
Well, see, that's why I wanted to bring up the currencies today, actually. Okay. Because I know I mentioned the gold, the silver, the crypto, because we talk about positioning all the time, how important it is. And so I want to talk about the United States, and we talk about it all the time. It's the elephant in the room, but it's their debt. The United States has a lot of debt. Oh, yeah. I think they said
I think it's like 36 trillion.
Yeah, but I can't remember the exact statistic, but they said like every 100 days it increases by like a certain trillion. Like it's something crazy. I know like we're talking about it from global economic standpoint, but I kind of just want to start a conversation about debt.
Okay.
What are your thoughts on debt? Like, well, I mean, obviously we just kind of talked about the United States and having, positioning, having different currencies in case this doesn't, because the whole reason the United States is even in this situation about possibly losing its reserve currencies, not saying that's going to happen, but just the situation that they're in right now, which is not great, it all comes back to their debt.
Yeah.
And so how do you relate that to everyday spenders or everyday people that accumulate debt? Like, just what are your thoughts?
That's a really good question. So we do have like a debt problem, which whoever you ask is probably going to say like it doesn't matter because we can just print more money.
COVID's a great example.
Yeah. COVID's a great example. When that trickles all the way down to people like you and me, I see it as this like double-edged sword. What you can do with debt is really, really good. But if you don't know how to use it, and if your mindset, which I argue our culture places on you, the mindset that like, oh yeah, if you don't have something, just buy it with debt, use credit cards, get loans, like student loans, all these things. Mm-hmm. So I would say I'm not anti-debt, I'm not pro-debt, I'm like right in the middle. There's some things I like to use debt for. I'd probably lean more towards the anti, just because from me, and like this is where I think you and I are probably going to differ. Me from like a principled mindset, as well as like a kind of like a peace mindset. There's only so much debt I'm willing to like take on for certain things.
Do you have like a percentage you go by? Or?
Ideally, I would like to have as little as I can.
When's the last time you had debt? Maybe student loans.
The last time we had debt, we paid off Lydia's student loans back in 2023.
I remember actually that day we were talking on the phone, and you were just like, I'm going to pay these off right now. You just did it, and man, that's an awesome feeling.
Yeah. Yeah, we so
you don't regret that one bit.
Oh no, never. Because why? You know what I mean? I think that it's a win for you mentally, for one, but also too, if it frees up the money that you're putting away to be used for something else.
Right.
Now, to other people, there's certain scenarios where like having debt's good, but I would say that for me, so I'll go back in time to where I had like the most debt. So when I turned 18 to when I was about 26, I've had zero debt. I paid for everything in cash. I didn't have any student loan debt. I had no car debt. I had no like all these things, I was just like, I'm just gonna pay for it in cash, and if I can't afford it, I'm just not gonna have it. Paid all of my cars all in cash. I paid for all of my schooling, like scholarships or like grants, help paid for it. And then wherever was left over, I just went and just worked to pay it off. So the last debt that I had $13,000 on my car. I had about $2,500 in student loans, and I paid all that in a year and a half.
That's impressive though, man. I didn't know you had that much.
Yeah, I mean the car was crazy. Like, it's funny because I was telling Lydia earlier today that the car was probably one of the best financial things that I've ever done as far as like planned, because I was like, okay, well, my interest rate on my car was like 2.7% for like the longest loan possible. I think it was like 80 months or something like that. I want to have the lowest monthly payment, and I'm just going to pay this off as fast as I can. So like, that's what I did. Since 2019, me personally, I've been out of debt, and then Lydia took on some student loans, and we just paid that off like almost immediately. So
let me ask you this. Like, let's just say theoretically one of your cars bit the dust, couldn't be fixed, and you were forced to buy a new one.
Yeah.
What system would you use as far as taking on debt? Just how would you go about that?
I'm always in the camp of buying used cars. For one, people might be like, oh, well, it's used. It's like older. It's probably more miles on there. But I can get like a reliable like Toyota Corolla right now for like 6 or 7K.
Really?
With like maybe like 100 to like 150,000 miles, and those will last me for a long time. Her Camry has almost like 215,000 miles. So we're thinking we're planning for a new vehicle. And now we want a RAV4, which is we're going to be looking into. But cool, I would say that
how much are you trying to spend on that?
We were thinking around like 10 to 15.
You just pay straight up cash for it.
See, that's the thing, is that I would have to look into it. I don't like having nothing down, and I think that that's something that like a lot of people are like, oh yeah, like there's some plans where you can have very little down, and we'll be able to give this to you. So
yeah. Oh, well, what if you had, like, let's say it's 15K and you put 5K down? Would you pay the rest off?
I'd probably have to finance it, but I would just have to make sure that because in the end, I could just pay for everything in cash. Like, I could. Now I would say that like cars, I would pay off as fast as I can, but I'm not afraid to like take on a loan if it means that, like, because we need cars to get places, to go to work. I'm not gonna be in the camp that's like, I'm always gonna, now one day, I'll be able to afford to buy everything in cash, but like right now I'm okay with like taking some debt on, and like just paying it off as fast as I can.
No, see, this is where it gets interesting for me, and usually where I don't say we like disagree on debt, but you might, over a 5-year period, there's a scenario where you possibly could have made more money not paying it off right off the bat. I'm saying like you put 5K down on the 15K car, and then you pay it off. So you didn't spend that whole, you didn't take the other 10K and spend it, but you left it invested. And I know we say nothing's guaranteed, but right. I'm saying there's a possibility you could take both the scenarios and you could have actually made more money by not paying it off right away and letting that 10K continue to snowball. So I know when we talk about this
right
with housing too, but you say psychologically you prefer,
it's also the
principle. It's principle for you too.
It's also the type of debt that it is. Car debt is terrible. Like,
right.
Like the interest on car debt is so insane, and I don't think it's going anywhere anytime soon. Obviously, like we can play theoreticals, but like, back when interest rates were like 0 to negative, like sure, I'll take on debt because I'm not paying interest on the debt. I think most people that kind of like the realm of people that I think that are on the side of like paying it off beforehand is that now I have extra money every month to go towards investing.
Yeah,
right.
That's true.
And you also don't have the debt. You're not paying interest. If we're talking bigger numbers, I can definitely see that, right? Because like, it would depend on the type of debt and it would depend on how much I'm actually making.
Yeah, you're right.
Because we're trying to make more than 10%. Like, we're trying to aim for like 15, 20, 30, as much as we can.
Right.
So if our knowledge can be able to make a lot more through like learning how to do like positioning and stuff like that, then yeah, I can see it. But I think for most people, especially with like cars, I think that there's no brainer. Pay off your cars fast as you can. I would also argue, and like, this might get some heat, quit buying expensive cars. Why do you need a $50,000 car? Now, if it's for like luxury and if you can afford it, if you're making like $500,000 a year, because everything scales up.
You make $500,000.
But look, right. $500,000. Yeah. Buy a $100,000 car. Who cares? Because you're making so much freaking money.
Right.
But most Americans are basically going into this thing where it's like, oh yeah, like, my debt can make a little bit of money every single month. And so like, I'm not going to pay off my car, but you're making like $50,000 a year. It goes back to last week's episode. Your income is not keeping up with your lifestyle.
Right.
So compound interest is going in the opposite direction. It's not actually helping you. The principle of the money making something is there, but is it fitting the mold of what your life actually freaking is? And I would say that for most people, that's not the case.
It was either the Money Guy show or it was maybe the Ramsey show, but they were talking about what's the worst kind of debt someone can have. And
the worst kind of debt.
And both of them mentioned at the top of their list, I think it was car debt.
But car debt's probably.
What's the number one killer of wealth? Something like that.
Okay. Yeah, I would say cars for sure.
Yeah.
You could say that maybe houses, but most people are not just rushing in buying a house most of the time because they can afford
car, credit card, house.
Yeah. House would definitely be last. Credit cards. I think credit cards is probably like the easiest debt to get, but it's not always going to be like the killer. Student loans is also one. But
yeah.
But at least with student loans now, we're probably going to get into student loans at some point. People are like, okay, well, student loans is going to get me a return on my investment because I can get a job. But it's like, can your degree get you a job? That's the question. Debt is this double-edged sword. I think the more money you have, the more leveraging debt makes sense. Leveraging debt's great. You just need to have the resources to be able to do it though. I think that someone starting out and trying to get to that position, they need to understand that of wealth building that you have at those lower levels. Now, as you go higher, it might be different. At those lower income levels,
beginning stages.
Yeah. Sorry. The beginning stages is your income.
Yeah.
There's no other better way. I just think that there's no other better way. Because like for one, you need to pay off your debt. You need money to pay off the debt that you actually get. And if you over leverage yourself, then you're gonna bottom out, and then you're really screwed. As your income goes up, as your assets go up, as your cash flow goes up, debt's great.
You use debt to pay for a trip recently.
Exactly. I definitely want to have a whole podcast just on credit cards, but being able to leverage credit cards. It's so much fun because, I don't care what like anybody says, it's basically free money.
Yeah, it is.
Now, the problem with credit cards and debt is that people use them too much and they're like, oh yeah, I'm getting points. Yeah. But you're getting too much.
Yeah, it's too much for most people. I'd say, yes, there's this camp of people who take advantage of credit cards, use the points, but they already have a great system. They've already positioned them. You're the perfect example. But majority of Americans, they don't handle credit cards the correct way. It's more of a temptation to buy things that they can't really afford. Right.
That's a good way of seeing it. Temptation. You see the golden goose with debt. It's like, oh yeah, like I can be able to like leverage this debt and make some cash flow on it. Oh, I can make points on this. The problem is most people see the good and they disregard all the bad. Right. They don't see the risk. They don't see the warning signs, and they're like, "Oh yeah, like I can buy Chipotle with my points, but you have $5,000 in credit card debt. like it's not actually helping you. In the future, whenever we actually go over credit cards, there's guardrails that I have, because I'll tell you right now, I've been doing my system with credit cards for the past 3 or 4 years now.
Dang, time flies.
Yeah, dude, it's insane. But I'll say though that a lot of people say this, and they actually done it where it's like, okay, well, I spend all the money on credit and then pay it off at the end of every single month. I think that works, but what you got to start with is the discipline to be able to do that, because people are like, oh yeah, they try it for a month or two, and then they're like, oh, well, I'm going to start spending more money on my credit card and just go back to paying the minimum monthly. I've worked with people, some personal people in my life. I'm actually having them on plans to pay off their multitude amount of credit cards. One common thing that they have is, oh, I'm only paying like $25 for just monthly, and I was able to afford this like $6,000 thing. I only got to pay $25 a month for it.
Look at this TV.
right. Look at this TV. Look at this trip. Look at, I've seen people put a car on a credit card before. It's insane the amount of things that people put on credit cards.
And now people are paying their rent for it like crazy because
they pay for rent
because they can't afford it.
Right.
And that goes back to the American economy right now. But
yeah. But like debt, debt is good and bad. I'm right in the middle. You're leaving money on the table. If the debt's too good to borrow, then I think that you're not taking advantage of it. You have to understand how to use it. I would say most people that are in the early stages of like building wealth, focus on your income, focus on your retirement, getting out of bad debt, which is the credit card debt, the car loan, the student loans.
Take advantage of what's going on in the economy. When the interest rates are up, if your bank is not offering a good percentage based on like what the T-bills are doing,
right? So
like right now, if you can make almost 5% in like a Fidelity brokerage account, put your cash in there. Don't put it in your bank where you're just making not even 1%.
Right.
So take advantage of America, because literally America is paying interest to you, so you're taking advantage of the debt.
Right. You're really leveraging debt, and you're not losing anything.
That is position.
It's beautiful.
It is. That's positioning.
Yeah,
that's what you want to. That's where your mindset has to go. Like, not how can I consume and take on debt. It's whoa, how can I take advantage of this and actually make money on this?
Right.
When you get to that level of thinking, that's when you're going to go to that next phase.
Right. Man. Don't be a consumer. Be an owner. That goes with debt. You own the debt, but don't let the debt own you. Use the debt, grab it by the horns, and let it do what it's designed to do for you. And that goes with like almost everything. Like, that goes with like investing. That goes with like, what are things that are like worth owning? You can argue that like a lot of debt is not worth owning, but there's some debt that is worth owning because it's actually doing something for you. Now, the amount will vary depending on like different variables. With all these things, just understand how they work, understand how to use them, take the good parts of it, understand the bad parts of it, and keep that out and just maintain the good.
And lastly, I'll even say, Warren Buffett, in my opinion, the greatest investor of all time, even he has debt on the Berkshire Hathaway balance sheet. So, it can be leveraged the correct way. Starting off, you can't be irresponsible with it. You have to build your own systems, position yourself, create the cash flow, and then take advantage of it. Right. That's where you got to get.
Yeah, that's where you got to get. It's all about freaking positioning. It's like what he said, because if you're not positioned, you're going to end up in massive amounts of debt. Going back to the income part of it, as your income goes up, you can be able to like take more options, work on yourself. Going back to last week, it starts with you. Have a vision. Go down the path that's going to set you up for the future, all the way until you're ready to retire. And that involves understanding debt. It involves a lot because most people are consumed by debt. They're killed by debt. People are so strangled by it and held down by it that they've lost hope. They think that they can't get out of their position. Somebody that's like a lot younger can be like, I don't want to end up with like $100,000 in debt. I want to be able to take all the money that was debt and then put it towards something, kind of like what we're talking about. Position yourselves correctly, and that'll compound. And by the time you're their age, you'll probably have like 5x what they got, 10x what they got.
They'll be borrowing from you.
Gosh,
you'll be
man.
collecting interest. No,
Yeah.
just,
Oh yeah. I mean,
you'll become the bank.
yeah. You'll become the bank.
No, but yeah, like you said, man, it's just get those systems going, get that machine working, just get it working for you, man. It's
Right.
such a beautiful thing.
Right.
So
Let it work
powerful.
for you. Don't let it. Don't. I just want to thank you all again. And don't forget to please like the video, share with your friends. Like what he was saying earlier, you know, we're back on TikTok. We're gonna be putting our short form content on there. Please be sure to go out there and follow us on there. Comment your thoughts on debt. I can't think of somebody that hasn't had to deal with debt, and like, you know, maybe they have experiences that are like different than ours, but we'd love to hear from y'all.
Yeah. And I'll say this. I mean, I have student loans I'm paying off. I have a car I'm paying off, you know. This man has no debt. So you're getting
both perspectives.
You are. And it's really interesting. Guys, we love y'all. Until next time, let's continue to give and grow.
See y'all later.